All right. All right. Hello, everybody. My name is Andre Henry. I'm the CEO of DreamAgain. Today, we're going to be talking about different money market accounts and just how to build private equity. If everybody could keep their microphones muted until the end of the presentation, save all questions to the end of the presentation, that'd be great.
Hold on, I'm gonna mute everybody right now.
It will only take like an hour of your time. Today, we're going to talk about Blackwell strategies, B.W.S. It's going to go into private equity and then how individuals can work on building different schedules from a tax perspective. Being that is Labor Day, just to throw out some facts for individuals and then some statistics. Bus ride in 1905, pretty much all the wealthiest individuals in New York traveled throughout the South and funded all the schools. And during this time period, it's like the early 1900s, Rockefeller, you know, he helped fund Spelman, Morehouse. Most of our HBCUs was funded by the elite. 80% of households at the moment, females are the breadwinners in 80% of the households, Black females. 54% of Black individuals have bad credit. 1/3 of Black males go to jail by the time they reach the age of 13. Black males lead the unemployment at 16.3. This is the highest since 2011. 60% when it comes to payroll, Black women make 60% less than the white male. The income to buying power for white individuals is at 13.4 trillion. Our spending power is at 1.4 trillion. It's pretty much a gap that you can see that's like 11 times. But not to say that, just to say like individuals within the United States, you know, that make 35K is in the 1% of the world. So it's like looking at it from a number perspective, people from the US have an advantage from a global standpoint. Today, we're going to talk on different topics and different financial instruments that can help an individual progress farther, utilizing the tools that's within this economy. MJ, you can pull up the first slide. All right. So the first thing we're going to look at and we're speaking on is what schools don't teach individuals. So you got your employee bracket, you have your self-employed bracket, you have your business owner bracket, you have your investor bracket. The employee bracket is probably what like 95% of the population is in. And the employer bracket, you pretty much wake up 9 to 5, you go to work every day, you get the paycheck, and you're within this employer bracket. Some individuals that self-employed start a small business and they work within their business. When they're working in their business, it's pretty much taking up a lot of their time, and they're putting in all the manpower to have this established. Employer, you're working for, you know, you're using your time for money. From the business, the B&I section, business is anybody that own a business and work on their business and not in their business. I is for the individuals that set up different money market accounts to help them within this, using like different HSA 529s, IRAs, solo 401ks, self-directed accounts. And the B is pretty much anybody with the EIN that's working with like that. We're working with these assets to build wealth for themselves. So like the B&I is the quadrants that most individuals want to transfer their wealth from the E and the S sector. Just speaking on just the sector, like how you can have income within these sectors. Because when an individual do your taxes at the end of the year, it takes your gross income from all these sectors and add into your adjusted gross income. So some individuals can play pretty much all these quadrants. The employee quadrant is pretty much somebody, the ideal individual just wake up and go to work every day, work their 9 to 5, put their money within the benefit accounts and use that to their advantage. S is like I have a friend that mows lawns, so like he buys everything within that that he needs to it takes to the most of my lawn and get all the instruments required. The business is individuals working on his business. Like one of my friends gets him to real estate. He pretty much got like the mortgage, the lawyer. All he has to do is bring the capital in order to start within this sector. He has some type of franchise or anything of that nature that just generate income from the money that he has. The investor accounts is pretty much the Roth, the 401ks, the individual trading accounts that people, run options or do small cap trading or anything of that nature. If they have like 529 that grows long term, they within the investor space. So individuals that want to use their assets to control their time, focus on the B and the I sector. When you focus on these two sectors, it's pretty much your assets and your money is pretty much going to take advantage of it's pretty much going to take advantage of how you generate an income and usually pay for your lifestyle. The E and the S is pretty much taking, your individual ability to generate income and to pay for your lifestyle. The B and the I, everything is on autopilot, to sum it up. Can you go to the private equity one, MJ? All right, the next slide. This is how all individuals should aim. Like, we're not taught this system within school because we're institutionalized to believe that being within somebody's investment is the comfortability of life. So like if you look at this diagram, all right, you got a private equity firm, you got limited partners, you got private equity fund, and then pretty much broken down at the bottom is investments or different assets. So like the people within the E quadrant, in the E quadrant, you would technically be the investment at this point. So when individuals go to work every day and it's like the person that started the company got the full benefits. That's why CEOs get paid a lot. They're pretty much at the top of this, like it's just their investments. And when an individual hires you within the investment of this diagram, they pretty much write off everything. So like your health to them is 100% write off. The only thing that's not write off is like life insurance, but pretty much like your commute and everything is pretty much an investment to them. And then they're using debt and other lines of credit to pretty much offset everything. When you're using these type of tactics, this is like when it's private equity, you don't really pay any taxes because you're using all the assets to pretty much offset like any liabilities. So in terms of like different money market accounts that would help set these different types of private equity funds would be like an HSA account, because with an HSA account, you can write off your health expenses 100%. With a 529 plan, your education expenses 100%. With a Roth IRA, you don't have to report any taxes in terms of like what you're gaining within that account. A self-directed IRA, with a self-directed IRA, you can invest in like your cousin, like not family, but like a friend's business, just writing up the security and defer all the taxes forever. It's like the real instruments that build wealth, generate income. No reporting has to be occurred until the funds are used. If you study the value of the dollar since 1917 to current day, it lost about like 97% of its value. Now, when you're using these different money market accounts and you look at the stock market or real estate in general from 1917 to current day, they're up like 13 million%. Like the dollar loses value when it's not being used to be invested in this economy. We live in an earn and invest economy. If you have your money just sitting into a savings account. I mean, inflation like 4.2%. And then a savings account, you're lucky if you get like 3%, but you still will lose 1.2% on your money. So with these tax-free accounts and just using like a small business in general, you'll help yourself like retain your wealth for generations. Like all these accounts that I mentioned can be carried on for generations tax-free. And it goes like your kids, their kids. It just builds generational wealth down the line, just going forever within these private equity strategies. MJ, can you go to the schedules? So like any individual that wants to, get into learning how to build these different income streams or these assets for themselves will have to just learn the schedules within their annual tax form. We try to keep it simple for like all individuals. We got a team together that work in different areas in terms of investments, from real estate to stocks and bonds, even in insurance or just credit overall. We got individuals that will help individuals get on the right track to build their schedule. Like just like how people have a daily routine and make a schedule, your money has a schedule just like it. So when you're looking at the different schedules like when your money works for you, you pretty much open up all the schedules to the last diagram. This is like the simple breakdown for individuals that want to start the last diagram or even the first quadrants. Even if you don't want to, it's like how far you take is how much like effort and your money work and like putting your money in the right places so you can pay less taxes as possible and have your money just keep working to take care of your lifestyle. These schedules, itemized deductions, pretty much, you're writing off, like you're itemizing like things that need to be written off. Like these schedules are pretty much the breakdown of everything that your money will go to work as in terms of the different money market accounts and having a business structure. So when you have a LLC or if you have an LLC, an S Corp, C Corp, whatever your nature, like all of them have tax advantages and they all fall within one of these schedules that you see on your screen. The HSA account will be within like Schedule D. Like if you have a business, you're a single member LLC and you're trying to learn to expand the business, we got strategies for that. And you should learn like your cell phone can be 100% write-off. Food since April been 100% write-off for individuals with businesses. Security is 100% write-off. So learning your everyday expenses and keeping track of the things that you're spending in terms of your money can help offset taxes at the end of the year. So say if I was a trader and I made $10,000. In reality, I mean, like capital gains tax is like 35% short term. In reality, you losing 50% at taxes. So it would be a smart decision would be take your, the money that you would have to pay in taxes and put it into asset vehicle. Once you put it in an asset vehicle, it could be like your business or one of these tax-free accounts, and use that capital to help offset the capital. It's like offensive, defensive strategies with your wealth management accounts, and using like small business to help offset that as well. And the debate, like the thing is, like people are unaware of like the advantage of these different accounts and setting up these schedules to learn like the private equity route. Because if the private equity route will help you, it just help you long term in terms of like taking your money and helping it grow forever. And like for instance, like the people that's making millions of dollars right now, the billionaires, like with Biden coming in with all these tax laws, it's like the people that's worth like 500 million, 100 billion, none of them like breaking the sweat because they already implemented something to transfer their wealth to their kids. It's called PPLI. This is the private placement life insurance. So it's pretty much a cash life insurance where you can put millions, I mean like billions of dollars in, then have a beneficiary. If you die, the whole money will go to that beneficiary tax-free. That's the way through Biden infrastructure, like Biden's tax plan and what everything that they got going on right now. They're using like private placement life insurance. They're using these asset moving vehicles to transfer their wealth over and over again. And it's like 100% legal. They put it in the IRS laws. We follow them on a daily basis. And I just feel like individuals should be aware of this information and data because it will help them start financial freedom for their kids and going forward. Because if we keep going the lines of like what was set up for us, then it was never like you gotta at least do some type of transition to take on the environment to help your wealth go, generations, using real estate, business, stocks, and learning understanding like all the different advantages of just being in certain states from a tax perspective. Like I started my company in Delaware because most of the Fortune 500 companies started in Delaware. They start in Delaware and operate in other states because Delaware has no corporate tax, no sales tax, and limited liability. It protects individuals. It'd be like all arbitration in terms of court. In fact, Delaware was the last state to free the slaves because the paperwork and the value of it being one of the first like 13 colonies. There's a lot of history within Delaware, and then using that to your advantage, just moving forward, give you like ultimate asset protection. If anybody interested in what I'm saying right now and want to learn more, can you just leave just drop some type of emoji or something within the chat so I can see like some type of feedback? All right, cool.
Yeah, put a one in the chat.
Yeah, drop a one in the chat or something. All right, cool. Appreciate y'all. We appreciate it. Thank everyone for coming, sitting within the chat. The video is going to be available right after this. Just got to put everything together. And then in terms of just like that private equity and going back to that first diagram, it's a trust that's pretty much second one, my bad. That's just the E, B, and I. This right here, when you're looking at this, is a trust that's more powerful than, it's like the most powerful asset within like America. It's called the South Dakota Dynasty Trust. So after getting all your investments in here and getting that private equity fund set up and your limited partners, you can activate this trust and it pretty much help you. You pay one tax for all your, like everything set up here. It's one of the most powerful trusts. Like if individuals want to learn more, we could definitely just tap in and just see where you will want to take, your investments. Because looking at this, say if you do work at the Dynasty Trust, self-directed, but looking at this figure, you want to just keep in mind that like using these asset vehicles like a self-directed IRA, for instance, say if I did work, right, and I worked for 20 years and I've been loading money into my 401k and I got 100K in my 401k. Once I leave that job, I can roll it into a self-directed IRA or a Roth IRA. So like I'm not knocking working or anything like that, because if you roll into the Roth IRA, you don't got to pay no taxes. Then you can just flip that money without having to tell a soul until you take it completely out the account. And then with self-directed IRA, it opens you up to all asset classes. Is limitations on what you can do with this type of account, but you can pretty much like finance a friend's business or something like, or you can use it like as a loan, like onto somebody's property or something like that. It's like it opens you up to every asset class, and then you can defer the taxes forever and never have to pay taxes. And it's like the rule of that type of account. And it's all different accounts that people should apply with what their their strategy is. And then you can go to the last slide, bro. That's the last one. All right, that's cool. All right, yeah, and then like if anybody got any questions, please save all your questions. We're gonna get the video up, and then once it's up, you can just drop all the questions under there, and then we'll just tap in with anybody that want to look for more of this information and see where they can start to build their wealth journey going forward. I appreciate everybody for attending. I didn't want to take up too much of anybody's time. We also have the book club. The book club pretty much help individuals keep 100% royalties. You learn how to drop your book in international barriers, and we help individuals get on marketing campaign. We got the tax franchise, helping individuals, start their schedules and build it with different partnerships with the HSA accounts, the 529s, ADP, accountants today, so you could keep like CPA. It's basically like you can control your own books. We're going to shadow and teach individuals how to control their own books, starting their own private equity within their family, building generational wealth. And then we're all a team. We got the resources, keep everything going. And if anybody have any questions, just save them to the videos posted. It's going to probably be on YouTube, and then we can just go forward from there, reaching out to individuals, setting up one-on-ones, seeing what assets will work for each individual. All right, bet. And thank you, everybody for your time. I speak fast, I'm sorry, but I hope it was a lot of information dropped, and we can help anybody the best way that we can. Appreciate y'all.
Peace, everybody. Want me to cut it, Jay?
Yeah, you can cut that, John, bro. I think that's
all right, peace. Okay.
Just a little additional information to help individuals understand the quadrants. Been within the S or the E quadrant, the left side of the grid, which is the employer or the self-employed. The right side would be the B and the I, which is the business and the investment. So how I transitioned out of the S, self-employed, with my tax service business, I started a franchise for it so I can make it into an actual B and be on the right side of the quadrant. Now the business is pretty much running itself and doing it. And how I did that, I made strategic alliances. So working with different firms, I reached out and had them pay my EIN directly so they won't pay me as an individual. When you getting paid as an individual, you'll have more tax liability. Being on the left side of that grid, you have more tax liability due to people taking advantage of the business deductions, owning real estate businesses and investment accounts, being on the right side. So them paying less in tax liability. With the strategic alliances and the 5-for-5 franchise deal, $500, you'll get a partnership with Accountant a Day, getting free CPE courses on an annual basis for your franchise. ADP, for every 5 clients, you get paid $10K. If you get 500 clients, you could get $1 million payout. Backer, I started the DreamAgain. Backer fund is 529 plan, so education expenses. So with the education expenses, when you sign up for this account, you'll get $15 for your kid, and then you'll get $15 towards your own personal fund for your kids when you have your own personal franchise. And then with the DreamAgain fund, pretty much it helps individuals It helps individuals pay for college or K through 12 or private school tax-free. Say if I owe 10K in capital gains after making 10K, I can utilize these education expenses, paying for these education expenses like most people usually do if they're paying for college or private school, and deduct it 100% deduct it 100% tax-wise. So if I owe 5K and I use 5K from a 529 plan, it would cancel out and I owe no taxes. That's the deal with Backer. Lively HSA is a health savings account. So with this account, same ordeal, but in terms of health-related expenses. So if you spend 10K for like knee surgery or something like that, using your HSA credit debit card that they give you, you can offset your expenses 100% towards capital gains. So if I made 10K and I used 10K, well, if I owe 10K in taxes and I use 10K within this HSA account, then I can write it off 100% versus that would have. Last but not least, my alarm center, you get $100 and then you'll get $100 credit. The client that you sign up will get $100 credit on any physical asset that they use for the alarm system. This could be residential or personal properties, commercial units. Once you the individual sign up, you'll get $100. That's the franchise. You'll get the whole setup. Even those individuals that not interested in doing taxes, the program is pretty much made to help individuals take control of their books. So you can pretty much sign up for the program and just use it to utilize and understand your family books and what works for you personally. And then another example of setting up a business using like strategic alliances. We partner with Raymond Aaron to start the DreamAgain book club, helping individuals retain 100% royalties. Released in Canada, Germany, all across the world, and keeping all their royalties within that particular with that particular audience. So after individuals write a book on any topic that they want, they have access to media contacts. These are partners we have. We have like ABC, Oz. We have over 70 publicists. And just looking at this as a business setup, utilizing like partnerships and resources along the way. We also have the power to go on any platform, news station, media, brand seen on us, partner with us. So we have access to put out articles on these different topics. Even if you're interested in just a marketing media campaign, we'll be able to help with that. And you notice how I explained how I was in the business and I transitioned outside the business, utilizing the quadrants and understanding the right side doesn't or pay less in tax liability than individuals on the left. So keep that in mind. Thank you for reaching out. If anybody has any questions, please leave under this video, like, comment, subscribe.